Well, Kokkie Kooyman has got Dutch heritage, and so it's not surprising that we would one day catch up with him in Amsterdam. That's where you are right now, Kokkie, in the Netherlands.
Yeah, no, it was snowing on Monday, and minus degrees. It wasn't much, but Monday we went to see ING, and then Tuesday ABN AMRO, and it was 4 degrees going out there. It was cold. But I must say one thing. I know that's not the topic for today, but what really surprised us is how strong the Dutch economy is. Our loan growth, retail loan growth at ING is about 11%. Even in Germany, their retail loan growth is 6%, corporate loan growth 5%. And I'd forgotten the Dutch debt to GDP is 43%. So it's fiscally a very, very well-run economy, very understated in terms of what they've done. And I'm sure we're going to get to the banks just now, but what these two guys have really done is focused on digitalization. So ABN AMRO said their headcount is going to come down from 27,000 to 22,000 the next 3 years. Now, they hope that through natural attrition mostly, but yeah, so it shows you, and that's going to catch us as well. Well, it's not going to catch us. Our banks will follow. You know, your branches are going to get fewer and fewer, and your staff count is going to go down as you use AI and more mobile apps.
Yeah,
and the cost-to-income ratios didn't come down. So, yeah.
You have to compare the number of staff in South African banks of relative size, much smaller than those two. So I guess if you're a bank clerk today, you've got to be maybe looking for an alternative career or upskilling very quickly.
Yeah, you're looking over your shoulder the whole time.
Yeah.
When is someone approaching to tap you and say, yeah.
But looking over your shoulders, what Nedbank has been doing for 10 years now on this whole story with the state capture and with Transnet and the interest rate swaps, what went on there? Because it's now burst into the open. There is a settlement between Nedbank and Transnet. But what is behind all of this?
Yeah, so I actually saw Jason and Mike, in fact, was it last week or 2 weeks ago now? But it's the one question we didn't ask because, you know, each time it's below the surface and comes up again. But from everything I read, and they maintain that they are innocent. But the facts are they facilitated that the financing of that locomotive trade is now 15 years ago.
10 years. It was 2015. Yeah, so 10 years ago.
2015. 10 years ago. 10 years ago, and it was a large amount. And obviously, as we know, has happened in state departments. The regional financing was, I think, 3 or 4 billion, and that kept growing and that kept growing. And it wasn't only Nedbank. There was a consortium of banks doing the financing. Nedbank, well, providing the finance. Nedbank looks like they were the main arranger. And then where it gets murky is that the Guptas, or one of the Gupta companies, got involved. And that one can't ascertain what really happened, but the fixed or the variable rate contract was swapped into a fixed rate contract at a higher rate. And I know you want to ask me about FirstRand just now, but it's almost the same, where the banks were paying a higher rate and someone else gets a big commission from that higher rate. I don't know. I just don't know. Nedbank wouldn't have been that stupid to go and, for a government company of that size to go and charge specifically a higher rate so they can pay someone a commission when they had the contract. But that is what the allegation was about. So the court case was about mainly that Transnet have paid now about roughly 3 to 4 billion rand of interest above what they would have paid on the original contract. And Nedbank say, look, we were just a banker facilitating the transaction. We were just reacting to your clients and your advisor and regiments. I think it was regiments in the Gupta stable who were actually arranging the transaction. And they said, this is what we want. And this is, so Nedbank didn't. They said they didn't propose this. It was Regiment's Capital who proposed it, and they went along with that. And the Zondo Commission rightly pointed out maybe that Nedbank and banks generally should have been more, is inquisitive the right word? I don't think he used inquisitive, but they should have done more homework on the size and the legitimacy, potential corruption in a transaction. That is very difficult. It's easy for a judge to say that after the event, when you're a bank and you get given this huge lucrative contract, and but I've known Mike Brown, and I've known the CEOs and of the banks generally. My wife says I'm too naive in many things. Maybe I don't think so. The banks are too big to really get involved in skullduggery of that sort. So I would go along with believe that they were innocent, but maybe they should have done more homework and quicker and gone maybe even above Transnet and gone to the government to say, are you realizing what Transnet is doing here, what it's going to cost the country, especially as the order kept increasing for locomotives in the end, as we know. Well, Gigaba is now in court finally, that the locomotives didn't even fit the rails. But okay, that's another story.
Yeah. And as you say,
Alex, sorry, the important thing, obviously now they've paid a fine or admission of non-admission of guilt of 600 million. And
That's
that would have been provided. It is a lot of money. So just to say, as they say in this statement, it's really, this court case has been dragging on. And each time Nedbank's name is again in the press, like it now will be again. And then it just keeps saying, let's rather close this case, get it behind us. I can understand specifically Jason Quinn saying that it's in the era before him, saying let's pay 600 million if that. And they obviously argued a lot and came to a settlement with Transnet. Okay, we'll take 600 million. We won't mention that case again. And I'm pretty sure that 600 million would have been provided. I haven't read today's press yet, but that would have been provided for already. So it would affect this year's income statement.
But it's quite sad for ordinary citizens when you look at this. You say, look, something funny was going on, unquestionably, because we know as journalists, we were reporting this all the time because people were coming to us and saying, hey, I had a contract with Eskom. And they asked me how much it would cost to do a particular job of work. And I told them 400,000 Rand. And then at the end, I saw that it went through for 25 million. So what's going on here? And that's the way the Guptas were ripping off the system. They had a legitimate supplier, but they just they just pushed it through. And of course, they had the people in place who could pass through any price or any contract and so on. And I'm just wondering from Nedbank's perspective, is the fact that there is a new CEO also playing a big part here, that he wants to get on with his life and he wants to get on with a new world? It just feels in corporate sometimes that happens. I don't want to deal with somebody else's mess. Really, I've got much more exciting things to do.
Yeah. Totally. You could see that as well with the EcoBank sale, or it's going on now, where Jason also came in and said, we've been sitting with this conglomerate of banks in East Africa. It hasn't really delivered what it was planned to do. I want to build this bank going forward, and I don't want this to drag me down, this anchor. Let's just sell it now. We take the loss, and they sold it at a loss, and let's move forward. Now, I think it's similar. That's how I read it. I haven't actually asked him if that was his reason. I should have. But, you've got an hour with the CEO and a lot of questions you ask. But that's my reading. And I think that's right. You normally get that. And that's why in turnarounds are normally successful when you get someone new coming in. Because there's no allegiances, there's no favoritism. He just looks at the cold and says, why are we doing this? Let's just cut that in the same. Why are we dragging this case out? Let's go and try and get a settlement.
Like a soapy breakup scene, selling your car can be an emotional experience.
Just how dramatic was the car selling experience?
Not dramatic at all. I did my research and We Buy Cars was by far the best price.
Very not dramatic. But I like drama.
I was standing there watching my phone, waiting for the money to get in, and there it was.
Yes. Car, driving.
We Buy Cars, the easiest way to sell your car, by far.
I wouldn't mind a little more drama. Anybody bring me some tears?
And we must not forget that the board of directors have to give the stamp of approval. The CEO couldn't just decide off his own bat. He would have to go to the board and say, this is the reason why it makes sense to do it. And a fresh pair of eyes perhaps were one of the things. But you got to ask, the Guptas are still at large. Those people who perpetrated this fraud, whoever it was on, Nedbank-Transnet, whoever, they are still, they have not had taken any responsibility for it. And that's the thing that now must stick in the craw of the Nedbank shareholders. We've paid 600 million rand for something that some crook did to whoever, and they've paid nothing.
Yeah. That's the problem with the whole state prosecuting agencies and the whole system that's been denuded of capabilities. But that's why at least we are seeing increasing people coming to court. Let's hope. Well, you can see the whole police commissioner, the whole inquiry shows how corrupt the police service was at the top, or maybe still is. And so you just got instructions from a minister to squash that. And I remember I always asked the bank CEOs on the KYC and on with the money that the Guptas were taking out, etc. And even a lot of politicians taking money out. And look, the banks can only report. They report the cases to the FIC. And they said, we report these cases, and then the FIC decides whether to take action. And the Minister of Finance is on that commission, and he most probably then squashes it or says this is not important. And you remember the Guptas in the end started using Bank of Baroda, an Indian bank. And I actually saw Bank of Baroda in Mumbai, and I asked them, what are you doing? You're allowing your South African subsidiary to be involved in money laundering. And they said they don't know about this. They'll look into that. And in the end, I don't know if you remember, the license was revoked by the Reserve Bank after a while.
Well, I guess that's all the Reserve Bank can do is just kick them out the country. But in between, there's a lot of stuff that's happened. Kokkie, another story that's been baffling me is what's happening with FirstRand and the UK. They've been operating in the UK for more than 20 years. Westbank went in initially, and now that's come back to really bite them. So can you give us that story as well?
We're going back now to the late 80s, early 90s, where every South African financial institution was trying to extrapolate their capital into developed markets. And obviously, because everybody knew London, into London, you recall Nedbank, Old Mutual did acquisitions there. Sanlam did a few terrible acquisitions there. Later, Jim Sutcliffe, Old Mutual came and then bought Scandia in Scandinavia. And so everybody was trying to get money, trying to escape this weak currency. And just as an aside, I actually went to Chile once and I saw the banks in Santiago. And as I did my research, I found they were doing, all of them had done the same, trying to buy things in America, New York, instead of what the Chileans should have been doing is going to South America, and what our country later, the banks have gone into Africa. But okay, so this Motor Nova is the one that Westbank then bought, and thinking that they understand something about the vehicle financing business, which they do. They had a very good contract with Banco do Brasil in Brazil, which was stopped by Errol Kruger. That's another story. But here was something they thought they can do in a developed market country. And initially it went well. The problem was Motor Nova was it lacked finance, it lacked deposits. And so then they went and bought a bank called Aldermore, which was a nice little bank. And we actually owned some of it at that stage. A lot of those smaller banks in the UK were quite cheap. But the problem with those smaller banks, it's not like South Africa. They weren't growing. They weren't Capitex. But in any case, that was bought to give Motor Nova a lower cost of funding. And until then, it all went well, fairly okay. It wasn't a good business, the vehicle leasing business. But then the claims came against the financiers, the guys who do the leasing companies, that the banks were offering the leasing companies a better rate, or there's competition on rates, but for a rebate. And so your client effectively, in his contract, it wasn't pointed out to him that he's actually paying a slightly higher rate, or a higher rate. I don't know how slightly it was. But it was basically paying the banks a commission to get the business. So banks were paying the leasing company a commission, but received a higher rate. So effectively, the client was financing commission as to where the deal would go to. Now, I've heard a lot about this, and the banks, and this is Lloyd's and everybody, Barclays, everybody that was involved there, show that the client actually didn't lose that much. But okay, let's them go there. The point is, it wasn't adequately disclosed to the client that he was not necessarily getting the best deal. And so the financial authorities got involved, and I'm just trying to keep it fairly simple. The financial authorities got involved and decided to fine the banks, and at the moment they wanted to fine them back to 2007. So to restitute the clients for the financial loss of, and that's really where the banks have been saying to the regulators, this is madness. Firstly, and they did prove that the loss wasn't as big as is alleged, that it actually was disclosed. It wasn't just in big print. But, the regulators obviously wanted to, politicians were pushing as well for this to be, to be seen to be on the side of the clients. And where it hurt FirstRand is just, and the other banks, Close Brothers is the one that was the bigger, most affected, and then Lloyd's as well, is just the continuous saga. Instead of getting everybody behind closed doors and sorting it out between the regulator, the Bank of England, the politicians, and the banks, it wasn't adequate. It was dealt with in the press, and continuously the potential loss to the banks was escalating. So now FirstRand sit with an exposure in a country where I think they have provided now. They took another charge in the last income statement. These are provisions because we still don't know what the eventual final charge will be. But a provision for business done in the past. By the way, this type of business has been written for the last 5 or 6 or 7 years. So this is really in the past, and largely still by Motonova even before they bought it. But you are still liable for that fine and for the restitution. And you're sitting with a business that's not really going anywhere, also in a country where the political situation is very tough. I see just now that the banks haven't been charged with. There was a risk that Fiona Rees they would increase the bank taxes, which she hasn't. But so that's really where FirstRand are. That they're sitting with the operation in the UK that's just been hit with charges of not doing that well. And so what do? Do they just sell it? And it's interesting, we had a very good discussion with Mary Vilakazi also in that same week when you saw Jason. And so, and I agree with her. She obviously, they and the board are really sitting with this question, strategically, what do we do? Do we get out of the UK? It was always seen as a diversifier into a strong currency, which proven not to be the case. But if you were to sell it now, the prices is too low. The pendulum has most probably swung very far into the one direction. I think correctly for the moment, they've decided, let's first see what happens. Let's see the UK to start coming back. But that's really been dragging FirstRand's share price down. It's been the underperformer. And it's most probably now at a valuation which hasn't been relative in price to book for a long time.
I'm wondering if Mary won't do something like Jason Quinn did at Nedbank and say, hang on, I've just taken over here. This isn't my issue. Let's find a buyer and let me get on and build this business.
Yeah. Now, she's been there too long now. Jason did it fairly quickly after arriving. Mary's been there now 2 years already. And this, look, obviously, Jason, when he did EcoBank, he looked at it and he said, I know we're going to sell at a loss, but we can use the capital better and it's unlikely to improve. I do think I agree with the thinking, and this is just talking loud with us, that the sentiment now towards banks and those and the whole leasing business is very negative. And, first get on the front foot. And they are doing everything they can. They've done a lot to improve the efficiencies, get the cost to income ratio down, get the cost of deposit down. So, but they'll have to make a decision. They're unlikely, because that was the other option. You go buy another small bank and you make it bigger and then grow. But you're not doing it in a growth economy. But it's top of mind for them. It is top of mind. I don't know if you've noticed, they've started buying small add-ons in, was it Uganda and Zambia? The apps have also been doing. But, so they have said they will grow into Africa as well. If you get the portfolio effect right, the profitability is higher in terms of return on capital. And so they've decided they'll go rather that route and over time then decide what to do with Aldermore.
So Standard Bank were the ones who actually did, with hindsight, have the right approach by going into Africa when they did. But Kokkie, very interesting point now. 2 weeks ago today, the governor of the Reserve Bank had his way. And the finance minister agreed we are going to have a 3% inflation target from a band of 3 to 6, which effectively meant 6, although he did say it was 4.5. That target is not kind of fully understood yet by investors in South Africa, maybe not believed, and certainly not understood by members of the public. But if Lesetja Kganyago gets it right, and if the inflation in South Africa comes down to 3%, and if South Africa becomes a low inflation destination, then would that have implications for our banks on the one hand, and secondly, for this drive to try and find some kind of investment somewhere else in our so-called hard currency? Because if the rand, if we grow at 3%, if we have inflation at 3%, the rand will become a hard currency. It just has to, given the relative inflation to other parts of the world. I'd love to get your thoughts on that.
So the end goal is good. And indeed, lower inflation does mean a stronger currency, which does mean your interest rates are lower, because often your interest rates have to remain high to protect the currency. So your real interest rates come lower, which is good for growth and that is good for the banks. But the road there is tough, because it means that you've got to have the government on board as well, because it also means that government has to curtail its spending to keep not through fiscal stimulus, keep inflation higher. And it means your interest rates have to stay a bit higher just to suppress your inflationary pressures. So, and at the moment, you've got just an ancillary problem, and that's interesting. Internally, we've had a lot of debates within Denker on that. And the argument was more, he shouldn't do it now because our debt maturity profile, in other words, the number of years still the current debt that we've got to pay is quite long and the interest rate is quite high. So you are now bringing your interest rates down, but you're still paying this high cost of finance. Whereas if your maturity profile was shorter, it would mean that that runs off fairly quickly, and you can replace it with lower costing debt, because that's really where you want to go to. So, but short term, there will be pain for the economy, but longer term, if you get it right, it's actually very good. It also means that South Africans won't want to take money out of the country. You get more capital coming. But a question I get asked a lot at the moment is, our bond yields have improved a lot, but the bank share prices are not really moving to the same extent. Why? And the bond yields are reflecting what's happening to our current account balance, which is reflecting the exports in resources and gold, and so the fiscal situation of the country is improving because the exports are stronger. You could see that in our recent budget as well, that the tax take has been higher as well because of profitability from the gold mines and resources mines. But the foreign investors are not really buying South African incorporated, as we call it, so SA Inc. In other words, your Woolies, your Pick and Pay, your good South African companies, the banks, because they still haven't seen that government has really started a credible growth plan. Now, this government is still fixated on BEE and on a state-led economy. And so they're still quite worried about the whole political scene and can't see our growth picking up to 2, 3, 4%, where it should be. Now, basically what's happening now in the mining industry, and a lot of things on the ground that are improving, even at Transnet now, started off with Transnet. Transnet has actually improved dramatically through intervention. A lot of work from the banks, in fact. I think few people know how many employees from the banks, a senior level, have been seconded to a lot of government institutions to help there with plans, with budgets, so a lot of things are starting to improve. Transnet and the ports have actually improved dramatically as well. You can see our export volumes going through the harbors improving. So I think where the bond market is right, in the end, it means that we're going to see lower inflation, lower interest rates, and the economy is going to grow a lot stronger. But the foreign investors specifically don't want to pay up for that. They're still buying gold and resources rather than bank shares. So all of this getting together, South Africa, Piet Viljoen will certainly win his bet handsomely if he extends the bet another year.
Well, it is a year to go still, and he's well in front.
Okay, good.
That's
no,
for
sure. This year could be a very good year for South Africa in terms of if this current momentum continues. With the valuations and on the ground, confidence is improving. You can see that house prices are going up, not only in the Western Cape now, but in most of the other areas in South Africa. House prices are going up. People are coming back wanting to buy a house. That is, so look, where did we start? Have I answered the question?
Well, the 3%. If we have a strong currency, if we have a 3% inflation target, and we reach it and we hit it, that means our inflation is going to be lower than elsewhere, and currencies are supposed to reflect the differences in inflation in different parts of the world. And you see there are many countries, many of our trading partners are not managing their inflationary expectations, and certainly their likely inflation rate could be higher than ours, which means the rand could be stronger.
Yep.
And what does that do to banks?
At ABN AMRO, part of their capital markets there, the whole is a projection going forward, and their inflation rate forecast for the next 3 years in Europe averages 2%, and for the Netherlands actually slightly higher, because the Netherlands has a higher growth rate, but they say 2.2%. So if we achieve 3%, we 0.8 difference with Europe. And as you say, then your currency stops depreciating, and then it becomes a behavioral thing. You don't benefit by taking money out, and your interest rates are still higher here as well. So the fear has always been why people have taken money out as partly the currency risk of currency depreciation, but mostly is the potential political change. That if you get the ANC breaking up, and let's say the left-leaning part going with the EFF and MK, and you get a larger bloc that votes out the DA, you get a change. Yeah, those type of things. That's, I think, what worries people most. And yeah, I don't want to get on the political scene, but even there, it looks like the ANC is starting to lose support. But that really is what keeps, I think, a lot of foreign investors still away. And but that's going to be determinant on the rand. And the stronger the rand gets, the better the growth. I think the more credibility the GNU will recede as well, because whether it's them or not, the country is feeling better, in my opinion.
Kokkie,
and so for
South
banks,
African,
it will be a very good.
Yeah, South African banking shares. If I take that optimistic line and say, well, the GNU is going to hold. There are many messages on the wind which are suggesting that finally things are starting to come together. You can't rebuild a house, as I mentioned to someone the other day, that has been trashed in an instant. But it does look like the foundations are there. And there are many examples of that. If you take that optimistic line, then presumably banking shares right now in South Africa would be a very appealing long-term investment.
Yes. So if you look at Capitec, it's obviously very expensive, and that's a bit of an anomaly, and it's simply because it's one of the few real growth stories in South Africa, the same as Outsurance, which But if you look at the two or the three that are the cheapest, okay, Investec is a bit of an outlier there because of its UK presence, 50-50 UK, but it's also very cheap. But if you just focus on the two larger of the four, or the two of the big four, Absa and Net Group, then both are trading at about 1 times price to book, and for a return on capital at the moment of 15% and a dividend yield of roughly 6-7%. So that is very defensive. So investing in those, you're not going to lose. A 15% return on capital for a 1 times book, that is on the scale that we normally use, shows on the very cheap side. So you normally have this thing, price to book, return on capital, and the ones below the line goes up, diagonally below the line is cheap, above the line. So Capitec is above that line, return on capital of 30%, price to book of 7%, and you get a return of capital of half of that in Nedbank Absa, but a price to book of only 1/7. So as soon as you get stronger growth and your foreigners start coming back, they'll start going, well, you get two types. The guys who just go and buy the quality, who will buy FirstRand again, or the guys who just say they'll buy good banks at cheapest price. And as our growth picks up to 3%, your so-called jaws open up. Now, your revenue grows faster, but your costs don't grow as fast. And then the return on capital goes up and become even more attractive. So if you believe the positive story, then your banks should do very well. But most South African companies are the JSE, excluding the offshore and the gold miners' resources, are actually very cheap. So, but the bank specifically, yes.
Well, I saw yesterday Zeda's results came out. They own the Avis and Budget operations, and they had a pretty torrid year last year, relatively speaking, on the tourism side, but they were sitting at a 9% dividend yield. And despite the difficult year, they still grew their headline earnings by 20%. And they got a better year coming. Of course, the share price jumped as a consequence. But it's really to try and find those little jewels, as Warren Buffett has done with Alphabet. I got to close off with that. I can't resist talking to our Warren Buffett expert on what the Obas of Omaha is doing, finally buying Google shares.
Yeah, I've just been reading occasionally in the evenings over weekends again, Manga Buffett Unscripted, the book that was released at the last AGM. And I must say, everything I read about, it's a collection of all the shareholder meetings, what they said over the years from 95, I think, by topic. And to my mind, the Alphabet purchase shows that it is not Warren involved anymore. It is Ted and Todd. Because he continuously says, and Charlie used to then say, I've got nothing to add, or I totally agree, in that he wants to invest in a company that he can see the end game. How does it end? And remember, he was very good friends at that stage with Bill Gates. And he must have had good insights into Microsoft, but he didn't understand that environment well enough to buy Microsoft when it was actually still fairly cheap. And if you even think after 2000, when it first fell quite significantly, he could have bought it cheap and he never did. So I think it more attests to the fact that it's not Warren Buffett, it's Ted and Todd, or I think it's now only Ted who's making that call. And Warren has said 2 years ago still that he doesn't get involved except for a new company. They come and ask him. Well, they just tell him. And so that if there is any wisdom he has, and he most probably, I don't know if you recall, I think they said, was it 5 or 6 years ago at the AGM, they really lost out. And Charlie was quite critical that they never bought Google, and they had the inside information, then they could see, and they never. So maybe they're saying, look, after all these years, company's well positioned, and now is the time.
Well, maybe he's also reflected after the brilliance of his Apple purchase? Because that was the first one, wasn't it? Where he went and sat behind he sat behind the counter at Gorat's, where we've had a number of steaks over the years, and saw people coming in there and realized that, well, Apple's on Apple's on the way, and perhaps look, the timing of the purchase of Alphabet was absolutely brilliant. It's been on a tear since the Berkshire guys bought in.
Yeah, so Apple, the thing that's changed in his mind when he realized that this is actually not a technology company, it's a consumer company. People are buying Apple for the brand, and so whatever they sell in the end, if it's cars or houses or electronic systems, people will buy because and that's really, so what's switched it so far on Amazon, I don't know, but you're right. And often these things do have self-fulfilling elements in it. Him buying it obviously has attracted more eyes to Amazon. And so whatever he buys big, it will attract attention.
Alphabet.
Alphabet. Sorry.
We don't want people to go buy Amazon now because Kokkie's got inside info from Warren. No, it's always great talking with you, and thank you for finding time while you're sitting in foreign climates, very cold. Are you off to go and see some more banks now to go and get a little update on that?
Alec, just to end off, we next year is actually very, very exciting. It's a conference we've been going to for many years, the Woods Conference. It's a brokering house, but in Prague. But it's a collection of all the Central and Eastern European banks who are there. And we have investments in quite a few of them, but it's banks from Kazakhstan, Uzbekistan, Georgia. Obviously, the two Georgian banks are there, Bank of Georgia, Lion Finance now on TBC, the banks from Prague, Romania, the Warsaw Exchange is there. So it's the whole, and those actually had a very strong run the last few days. As suddenly, it seems that peace might be possible, because if you have peace in Ukraine, then that area suddenly loses its risk premium. But it's very exciting. I'm seeing about, I think, 20 banks in the 2 days. So yeah.
How much?
We will stop after that. I'll show you what they're doing in Georgia and Uzbekistan.
How much traveling are you doing?
No, so fortunately, this is in Prague, so it's a conference, so all the banks are coming there. I was actually invited in June this year to do a trip to Uzbekistan and Kazakhstan, and I almost decided I think I'll do it next year. As you say, it's fairly expensive to travel there for a 2% position in portfolio. Always got to weigh off the costs against but Uzbekistan, just to really, is a country that is finally seemingly pulling in the right direction. It's actually also got gold mining, funny enough, but the politicians are doing the right thing. One of the fastest growing countries now in the world. So let's see.
And that's the problem for South Africa, surely, is that you get these countries who very difficult for many of us to even pronounce the names. Kazakhstan, we know because of Borat, but outside of Borat, it's kind of a caricature. However, they're starting to grow. Even Kokkie Kooyman is going there, meeting their banks and saying, hey, I might want to put money into this Uzbekistan bank. That's got to be a wake-up call for South Africa to say, that's who we're competing against. We're not competing against the United States and Europe.
Yeah. So the lesson there is, especially Uzbekistan, have become much more capital friendly. So, doing the right, they're actually putting together a company which they want to list on their stock exchange, which they also started a few years ago, where they put all the SOEs together, the state-owned enterprises and a few state-owned banks. Now, I'm meeting them as well, but it sounds very exciting. We get all the state-owned enterprises in Uzbekistan, and you think, well, would you buy a listing of a collection of Eskom, Telkom, SABC? I don't think so. Transnet. But what a listing does do, it means each of those managements have got to go and sit and sharpen their pencils, because they've got to go and convince external shareholders, now foreign shareholders, that they're going to run these companies responsibly and report back to them every 6 months what they're doing. And, and I think that is the discipline that the Uzbekistan government is deciding on. And that's what's attracting investors.
disciplines are very, very important in business. And if they don't have them, well, we see what's happened in our state-owned enterprises in South Africa. Kokkie, thank you again for the catch-up. Lovely to get those insights, in particular on what's going on with Nedbank and Transnet. And we look forward to the next time. That's Kokkie Kooyman. He's a founder and the director of Denker Capital and our guru when it comes to all things about the financial sector. I'm Alec Hogg from biznews.com.